Hello guys, today I'll be teaching you on what an area of liquidity is. Area of liquidity in a layman's term simply means areas that has money, all right? Areas where money resides. So what is it in actual charts? How does it look like? How can we represent it? How can we identify how, how an area of liquidity is being printed by the market? So we have different areas of liquidity. All right. The simple and the most important area of liquidity that every trader needs to know is this. This is how it looks like. This is the most important area of liquidity that every trader needs to know. Now, this is just a trend, which is a downtrend. Lower highs, all right, lower lows, lower highs, lower lows. Now, where is the area of liquidity in this price move? The area of liquidity is simply here. Now, why did I choose here? The reason why I chose this as an area of liquidity is because, all right, um, let me say this in a way that everybody's gonna understand. Um, if you look at this move here, this is a straight line, all right? Initially, um, if you're moving in, if we say straight line, a straight line is meant not to have any glitch or any, default, all right? It's meant to be straight. But here we look and we saw a little glitch right here from this point right here. We saw that, right, price shifted from the initial, you know, the initial direction. Price was moving in a straight line, and then we saw that price moved from the straight line it was moving and then continued going down. So this glitch right here is an area of liquidity, and it simply means that money is residing here. Money is residing here. Now, how do we mark this area of liquidity? We mark it by simply, using my horizontal line from the point at which it shifted from the initial trend, all right, to the high. This region right here is my area of liquidity. Now, if you go to your actual chart, your candlestick chart, um, if there is a wick here, that wick, if there's a candlestick here, that candlestick may have a wick, right? So if you have a wick up to this level, it doesn't matter how high it is or how short it is. Once you have a wick, this, the high of the wick, all right, that is where the area of liquidity stops, all right? So this area right here, from the point at which it shifted from the initial direction and continued down, so this area is your what? Area of liquidity. In short terms, we write AOL. So this is an area of liquidity. What does it simply means? Area of liquidity simply means that price is gonna come back into this area to take liquidity and then continue dropping down. This is what an area of liquidity simply means. All right. In other case, you can see multiple area of liquidity, especially when you're on the lower time frame. That is why you are advised to stay on the higher time frame and know what you are doing. Right here, this is an area of liquidity, and this is also an area of liquidity. Now, how do you know which of these areas of liquidity is going to hold? All right. This this is area of liquidity number one, and then This is area of liquidity number 2. How do we know which area of liquidity is the most valid? Now, there is something called the consumption theory. All right. Now, if I'm faced with this situation, and then the first thing I do is I look at the price action here and look at the price action here. If the price action here does not look consumed, then that means price is gonna come to this area of liquidity type 1 using this whole area of liquidity type 2, not type actually number 2 as liquidity, right? So that means price is gonna swipe all through to this region. So how do I identify whether this is consumed or not? Or how do I know whether this is fresh or not fresh? I simply look at, let's say there is a reference point, right? Let's say there is an order block right here or a key level right here. I simply check if this key level is not touched or it's still fresh. So let's say price is right here. All right. Let's say price came up to this level and then dropped and then dropped. Now, this reference point right here, this reference point right here is still fresh and untouched. Price have not really, mitigated it, whatever you want to use. This is your reference point. This is your area of liquidity. All right, price have not really entered into the area of liquidity and then it dropped. Right here, I know that, all right, I still have a fresh area of liquidity in this region, the first region. So there is a high probability that even though price have gotten to this level, there's a high probability that price is gonna swipe all through to this first area of liquidity and continue dumping. I just hope you understand this illustration right here. So let me show you how an area of liquidity is being identified on the visual chart. So this is a typical example on how an area of liquidity was being printed by the market. So right here, we saw that price was moving in a bullish direction. And if we go to our line chart, right, your line chart actually helps you to know, all right? So this is an area of liquidity. If you look clearly, price came, went up, price was in a bullish move, all right? There was a little glitch right here, and then price continued going up. So how do we mark it? We mark it from this, I told you, from the point at which price gave a little glitch to where, to the low, all right? And I told you that if there is a wick, we're gonna extend the horizontal line. So right here, if we go back to our actual chart, we see that, all right, the wick is right here. The wick is right here. So this, everything here is our area of liquidity. So this is our buy zone. I'm expecting price to come into this zone to give me a good buy. All right. So price went up, came into this zone, and triggered my entry within this zone. If you want to know how I refine it, this is not for now. I just want you to understand the entire explanation on how you can identify your areas of liquidity. There are a lot of areas of liquidity in which price markets can create, all right? For example, um, This is an area of liquidity right here. This right here. All right, let me give you a simple example. We go to the 1 hour time frame. So this is what I'm trying to explain, right? Um, if you look at this price action, price was clearly in a bearish move. You have a lot of areas of liquidity right here. But then looking at it from a wider perspective, you have this zone, you have this zone, all right, and you have this zone as well. This is also a good zone at which you can use. So just like I said in the beginning of the video, if this is your area of liquidity number one, and this is your area of liquidity number two. So right now, I see that there is a fresh zone right here that price may likely come into. All right. So if we have this type of case, we know that definitely price is gonna come to the first zone. So we put our limit right here and we wait for price to play out. So can you see price came in, tapped to the area of liquidity and then dropped. There are a lot of confluences you can use. Personally, I add my daily divider, add my session break to help me understand what I'm doing and the right time to get my entries. All right. This entry was triggered at 9 a.m. This is during London session. So and this area of liquidity was printed in the previous day. So I use two confluences. I can use the area of liquidity that has been printed by the previous day to get my entry and others. So I just hope you understand how to mark your areas of liquidity and how to choose areas of liquidity. If you have any question, just message me and I will answer your questions. So cheers and have a nice day. Don't forget to subscribe and like the video. Share your thoughts. Goodbye.